Hey, welcome to another episode of Footnotes. We've got a good friend on today, Nick Annan. He's a CPA at Elliot Davis, a firm you've probably heard of if you're in the Southeast and one of our viewers. But wanted to talk to Nick today about just some of the things that we both see in clients that we're working with as business owners, especially on the financial side of things within their business. But Nick just brings a wealth of knowledge and a great firm with him into this conversation. And so, Nick, thank you for taking the time out today to be on Footnotes. I know it's like any good conversation. We had a conversation before this to kind of help set this up, but um, you and I think, have an affinity in our roles as advisors to our clients of pointing out financial reports that are literally right under the business owner's nose that are coming out of something like Sage or Peachtree or QuickBooks, these accounting packages that
Mhm.
a lot of business owners put to use, and sometimes to good use, but they're definitely using them. What are some of the things that you're seeing in terms of that kind of reporting that's a lot of times being overlooked and certainly maybe not even understood?
Yeah, I think you see both of those things and underutilizing those reports, right? And in some cases, like using QuickBooks as an example, and the cash flow statement it'll push out of there, maybe putting too much reliance on that because even Intuit doesn't know how to really program a good report like that at this point. But I think first of all, understanding the strengths of their accounting systems, their ERPs, like what can it put out, um, and you want to make sure that you're looking at the three core reports, right? The balance sheet, the profit and loss, and the cash flow statement. I think each of those three things on their own, right, standing alone, they tell you something and they're helpful. But really, when you put at least those three things together, you're getting a more holistic picture. It's just so crucial that a business owner and their management team really understand what those are telling them, and certainly that the information going into them is accurate, right? Because garbage in, garbage out.
Why is it really good for a business owner to also have a working knowledge of those things in spite of having advisors, having professional staff there in the business?
You don't have to understand as the owner all these little nitty gritty details, right? But to be able to, at least at a high level, um, be able to understand what the outputs are, understand, and gauge the performance of those financial professionals that are working for you, right? If we've seen people who are the controller or the CFO to really understand, like, hey, is what they're doing correct? Does this make sense to me based on what I know, right? With my gut, are these telling the same story? We run into that situation a number of times where, hey, I know that we're a great company. It's profitable. We run a great operation, but the paper tells a different story. And that's going to have them run into issues later on if they don't marry those two things up and get it unified.
Yeah, we see that not only where you can run into issues in the company, but that on the owner's personal finances, which a lot of times are heavily dictated by the business finances. That also not having your business finances being understood and making sure those numbers are being run properly, the direct flow into their personal financial statement, if you will, it also matters. I think sometimes, a lot of times, with professional staffing companies, their job is to just think about the business itself. That's appropriate. That's literally what they were hired to do. But we know that business owners also have another half to their life, at least half, and that's on
Mm-hmm.
at home, so to speak, or on the personal side. And a lot of times, I know for our clients, the business is the financial provision to make that other stuff work. Also,
I think one of the common refrains that you hear in talking to a business owner is, well, I made, my profit and loss, I made X dollars in profit, but that's not in my bank account. Yeah, your net income or net loss is this, but here's why you only have, a portion of that in the bank, right? You're paying off debt, you paid dividends, you bought some equipment. These are things that aren't showing up on the profit and loss.
yeah, I think that's where it is. It is really a three-legged stool where you've got that P&L, which I think most business owners are very familiar with. It starts with revenue at the top, and then you subtract all the expenses. You get that proverbial bottom line down there. And then the statement of cash flows, I think you hit on it well in that if you've got a business that uses debt to buy equipment, your line of credit because you're trying to smooth out some bumps in your cash flow, so to speak. In the case of where if you got amortizing loans, the money you're paying on the principal part of those loans is not going to show up on your P&L. And if you're not running a statement of cash flows in parallel with that, that's going to kind of show you where the money is going in a sense. Because we get those same questions about, hey, I'm doing this, I'm doing this, I'm doing this. My team is showing me up and to the right. Where's my money? What about balance sheet? What do you see being missed a lot of times on balance sheets?
I recently had an experience where a business owner actually didn't have the balance sheet. Now, I say that, right, we talked about QuickBooks and Sage, and that's all. It's in there if you have one of those systems. In this case, they built their own accounting system in Excel. And I think one of those situations of like, just because you can doesn't mean you should, right? But we have these things out here that you can use already. Let's use one of these things. There's tools and efficiencies already built for you. You can get running with that. So in this case, when they built the Excel financial system, it did not include a balance sheet. And so we're in conversations, and customer says, well, tell me why I need a balance sheet. Okay, well, there's a lot of reasons why you should think about having that, and why you need to look at it, right? So first of all, at a very high level, it shows you what you own. Okay, so you own your cash, you've got receivables, maybe your fixed assets, maybe you got investments into either other companies or something like that. So you own those things, and then you've got liabilities, right? So payables, credit cards, debt, and we net these two things out, and that's essentially your net worth. And I think even at the highest level, a business owner should understand, what is your net worth, and that's what you're trying to build at the end of the day.
Yeah, I think we see a lot where I can hear your client sort of questioning the need for a balance sheet because in reality, I mean, it just seems like it seems unnecessary. Again, if you're only thinking about your company in a vacuum and you're only thinking about yourself in a vacuum, it may not make sense. But I've been doing this almost 20 years and I haven't seen where at some point when you start bringing in outsiders, either someone who's interested in buying your company, a bank being an outsider who might be looking at credit facilities and things like that. You're bringing on a business partner, someone else to kind of partner with you financially in the business, more shareholders, things like that. If there's even at some point an outsider is going to want you to prove your business on paper. And it just boggles the mind that a business owner would not consider those things. Again, no one's saying that it's particularly fun or enjoyable, if you will, but what's less fun, getting to one of those critical junctures in your business life and you being just kind of shorthanded, if you will, or a day late and a dollar short, as they say, a day late and a report short, where you can't kind of prove your business out to someone else. Why do you think business owners don't get taught those things, or why is that not being talked about more?
I think a lot of times they're focused on their, I'd say mission, right, or their business, what it is that they're building or selling, what they're doing, and if they're not thinking about it, they're not talking about the long term and the exit and the goals. They're losing sight of maybe some of those longer term reasons why you're tracking those accounts on a balance sheet.
Yeah, switching gears, and maybe this kind of dovetails with this, but in our conversation that we had previously to kind of help set this up, you talked about some of the things that you're seeing with regard to automation around people and processes. Can you talk a little bit more about that for the audience on just some of this automation, especially with like maybe financial tools in particular?
I think what's really funny right now to see all these doomsday predictions about what AI is going to do, and certainly it is revolutionizing things at a very fast pace. I don't know how you feel about this, but some of the organizations that I still run into, uh, in terms of how manual their processes are, what their people are doing, In a lot of cases, these small businesses, it's one person, right? And that person's done it the same way all 35 years they've worked for the company. And that's why that works fine until the day it doesn't. And so those companies that are getting ahead of things with technology, software, and AI, they're just going to be so much better positioned for themselves against their competition.
Yeah. Yeah, I agree. To say nothing of like the sort of the fraud, I wouldn't say maybe prevention, but fraud detection aspects of that. Sadly, we see that in businesses a lot where business owners get stolen from. People that are in positions of trust are mishandling money, misusing or mishandling cards, purchasing cards, credit cards, things like that. It and as intuitive as it sounds to include automation in there and to have good controls to detect fraud. Again, I hate to use the word prevent. You would like to think that the controls will help prevention, but I think it's more about detection and trying to catch it when it's very small and sort of innocuous before it becomes the whammy that I'm sure you've seen. I know we've seen this happen in clients' lives as well. So pushing gears, we're talking about business finances, but as a CPA, the most wonderful time of the year is over for you. I mean, we're kind of past that April 15th deadline, but October's coming. To finish those extensions. The old tax tail wagging the dog for business owners. We could probably do like a week long series on on that. But why do you think business owners just get so much energy and passion goes into just cutting tax bills? And is that often like the best thing to do?
Be very clear, I'm not a tax accountant, although I do know enough to be dangerous. I've spent the first portion of my career doing tax and audit work. I did live the life for a little bit. I spent all my time doing outsourced accounting and controller CFO work. But we're meeting with customers every month on a regular basis. So these topics are coming up. And I'll say, I'm not sure what gets them so emotional at the end of the day. You pay for all these other things, and taxes are just another expense, right? Why is that different than the gas you've got to put in the trucks, the people that you've got to pay, right? The raw materials that go into whatever it is that you're doing.
For business owners, the taxes actually go last. In other words, the tax code allows you to pay your team, pay for your office, pay for your fleet, pay for all these things that go into the sort of the money making machine of your business. And Uncle Sam, so to speak, says, "Hey, I'll go last. I'm the last expense that we calculate after we factor in these kind of things." I think the other thing that we see is that when you are managing for the lowest possible income tax bill during your business career, while the code does allow you to take advantage of certain expensing of items, it sort of comes back to get you when you're transitioning out of your business and you're selling, and you have to recoup some of that depreciation and you have to recoup that at income tax rates, not capital gains, which is what most people think they're paying on the sale of their business. It's what you're paying a lot of, but there's little whammies that can kind of come back to get you. And what we find is that sometimes tax professionals are not, they're taking orders from the client and they're creating the lowest possible tax bill, lowest legal possible tax bill. But what's not getting explained, or certainly it's not being heard by the client, is, hey, when we do these kind of things, are you ever going to sell it one day? And I think most business owners do see themselves, even if they don't know when, it is just a matter of time before they no longer own that asset. And we've seen clients get a lot of surprises, that things that happened years ago, before we were working with them, or maybe even before their current CPA was working with them, but it's kind of in the history, so to speak. And those are always very unfun surprises to walk people through.
Right. I mean, I think ideal state is you get to plan for your exit and you make a strategic event of it over a course of time, right? But I know you've probably been in a situation, I have too, where there's an event of some kind that you don't get that control and that
Yeah.
ability to plan, right? And so preparing like it could happen any day.
What do you see as that hesitancy to those types of plans, or even just kind of planning in general? It always seems that business owners kind of get caught in this bad, like, reaction feedback loop. What do you think are some contributors to that?
So I think there's a little bit of just uncomfortability that let's just put that down. We got stuff to focus on. We'll deal with that another day. I think certainly you've got owners who maybe they've got some generations behind them and they've got some hopes, right? And hope's not a strategy, but they've got some hopes that, okay, junior's going to come up and he's going to take this, or daughter's going to take this, whoever it's going to be. And, but for whatever reason, maybe that's not in their life plan, that they don't want to, be part of the company. So I think just, they're avoiding some of these conversations and not wanting to really deal with it.
And I think a lot of business owners find themselves just fighting fires a lot of the time. Maybe not all the time, but a lot of the time. And when they're not fighting fires, they're either looking for some downtime, they're looking to do something else, maybe sell a couple of things, move the business forward. It's just usually it doesn't quite make the to-do list of a lot of those important things. I think it's just almost like a matter of conditioning. I mean, we find that when people become our clients, they're getting serious about things like that because of some external event that's maybe gotten them thinking about it, maybe realizing that they're not going to be around forever, that they would like to have more control over some of those things. But a lot of times I think we see it does take kind of an external motivator that we don't manufacture, that you guys don't manufacture. It's just kind of part of the life experience.
I think sometimes too, maybe a business owner wants to go through that process, and they don't know how to start, and maybe they don't have that person or that set of advisors in their corner that can say, okay, hey, are you thinking about this? Here's someone you should talk to. Here's how we should go about this, and they just don't have the right help to do it.
I couldn't agree more. As an outside third party advisor, that people do need those things. They've got the whirlwind that they know, kind of the here and now, and taking care of their customers and clients and all the internal stuff in the business. But I think it's trying to start with themselves. And I mean, we've kind of found that a lot of business owners, oddly enough, spend very little time thinking about themselves. And kind of by extension, if they have a family, like that extends into their family. Again, not to say they're uncaring or unsympathetic. It's just that so much of their day-to-day focus and mind share is taken up inside the business itself.
Well, their identity is in this organization, right? They're pouring so much into it.
Yeah. Yeah. And they're conditioned to do that. And meanwhile, they've got, if they have a family, the family's over on the side, and they're patient and they're understanding of what's going on. And they're certainly the beneficiaries of a lot of that provision. But it's a lot of times it's easier to kind of just side with the business because it seems like you've got the most help there and you've got the most day-to-day focus there. All right, so Nick, we've covered a lot of ground here, but one of the things I was thinking about is people that do some of the things that we do. We're dealing with spreadsheets, we're dealing with numbers, and just really like a lot of just data and just factual information about our clients and their businesses. And a lot of times the data will turn into information that's leading us in a direction that might be shocking to a client, surprising in a not fun way. It may even be just flat out negative information that they're maybe hearing for the first time. And they might have professional finance staff that's on the payroll, so to speak, that's not telling them those things. What's been your experience with helping someone become more acquainted with their own facts, even when it doesn't start out in a positive way?
So certainly if you bring this robotic, here's what the numbers say, it's bad, it's good, that can really, again, to an owner who's really invested, obviously, in what they're doing, they're doing it for a long time, they put a lot in and sacrifice their own personal life to see this thing be successful, there's a certain level of care there that they have for that, almost as if it's, their own child, right? And so to approach that situation with empathy, and recognize what the feelings are in that moment. Ideally, right, you're doing some education all along, following trends to minimize surprises, but surprises do still happen. And so in those moments, cutting straight to it and coming up with, what are our options here? Okay, yeah, this is bad. Here's a direction we can go. Here's a direction we can go. What appeals to you? And so they can see that there's a light at the end of the proverbial tunnel.
I think you're right about the empathy. I think one of the things we also try to incorporate because of the nature of our work is, so say you have a business situation that's negative. And usually that's just not good on its own because it's either an impact to profitability or something other kind of financial storm in the business. We also try to tie it though, hey, here's how this is impacting you personally, or is it impacting you personally? And if it is, here's also why that needs to change. Because I think we've seen that sometimes as clients become more acquainted with their own facts that could be negative, they've been there before, maybe. It's easy to kind of brush it off because there's not they're not in immediate danger. For one thing, they're just finding out about it, and they'd never sensed that it was a bad thing or a negative thing or would have some adverse consequences down the road. But I think too, when you can pair that with some other things that it's going to impact that are outside of the business, we found that's fairly attention getting. And even though they might be really upset or mad, even certainly surprised, not in a fun way, like I said earlier, you have to help them get perspective on it. And I think sometimes it's the outside advisors, like you had talked about earlier, like outside advisors, I think help offer that perspective that's pretty unique. They're not fearing for their paycheck, so to speak. They're not in the family, so to speak, and with those emotional ties, they're pretty dispassionate, but they also have like the collected wisdom of helping many other clients before that. And as I like to say, there's really only about 6 true business financial problems, but when you get into the specific like situation, it can manifest itself in thousands of ways, but you kind of condense them into about 6, probably maybe 7. Well, Nick, thank you for the conversation. I appreciate your perspective on these things as kind of another helping professional in financial matters within businesses. If people want to find out more about you and what you're doing at Elliot Davis, what's the best way for them to do that?
I'd say the best way, come check out on LinkedIn. You can follow me and become connections with me there. And I'm always, I want to be a resource. I want to be here to help. Like you, I love Columbia. I love the Midlands and helping the business community here. So if there's anything I can do, that's where you can find me.
Cool. Well, thanks for your time, and thanks for a good conversation.
Appreciate it. Thanks for having me on.
Yeah. Hey, thanks for tuning in to this episode of Footnotes. We call it footnotes because the footnotes are often at the end of a report or a book that kind of give you a little bit of just extra context and extra color on maybe the subject matter at hand. And in today's conversation with Nick, I think one of the footnotes that I took from this is, he and I are both third-party advisors, but the real need that business owners have for a third-party advisor just can't be understated. You need someone who's looking critically at your business, especially the financial aspects of your business, someone who's running the numbers that is not drawing a paycheck from the business and is also maybe not a family member of the business or someone that benefits from the provision of that business, like the profits or dividends or things like that. If that's something that you think you would want more help with, I'd love for you to check our firm out at Pendleton Street Business Advisors. Our website is pendletonstreetadvisors.com. You can go there to learn all kinds of stuff about what we do and who we do it for. about how we run the numbers for our clients and help them get more out of their business that helps to fund their personal life. Thanks again for tuning in, and we look forward to seeing you next time.